Now it's quiz time.
Quiz time.
And
ding, 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 ding.
Here's the questions from
Okay.
last week. See how you did. First one was, what's the difference in between the World Bank and the IMF?
That's pretty easy. Nobody knows what the World Bank is and the IMF, so just make up any answer you
No,
want.
no,
Okay.
no.
Okay, the World Bank borrows and lends, so it actually acts like a bank, and it tries to help developing nations. And the IMF deals more with currencies and the balance of trade between nations and so on. And so there's differences.
Okay. Next one is, why is hitting the debt ceiling a problem?
Well, because, as I just mentioned, you're headed towards a crisis, and the bond market can react and not want to buy your debt, which means interest rates will rise.
We don't need those high interest rates right now.
Potentially, quite quickly.
Next question is, what are 3 things that drive commodity prices higher?
Well, or lower.
Or lower.
Drive them lower, yeah. So the 3 things are supply and demand. We probably guessed that already. Liquidity, if there's a shortage or if there's excess supply. And, of course, psychology. People want to buy Tiffany's gold, and it's because they think it'll go higher. Well, that's just because they think it'll go higher.
Animal spirits in the market.
Spirits, it'll drive it up.
Herd
Absolutely.
mentality. Okay, and last question is, should you buy shares of an IPO?
Well, as with almost everything, the answer, of course, is maybe. It's risky to buy in an IPO in the secondary market. Of course, if you're getting an IPO ahead of the IPO, that'd be great, but then you're probably not watching this podcast. So why are they going public is a good question. Is it growth for the company, or is it owners that want to cash out and push it off to other people? So, a couple of things. It's risky. Think about why they're going public and what the opportunities are.
What do you have for us this week?
Easy questions this week, I think. Why did Tiffany's do so much better than expected? What's the best way to deal with our fiscal situation? The third question is, how should you deal with financial pain? And the fourth question, which you have to stay tuned for, is, should we go on the gold standard?